Good morning, everybody. We've entitled this presentation, this talk, Delivering on the Strategy. And what we want to do today is go through our 6-month figures and reference the various processes that are taking place inside the company to the delivery of our strategy, which we are coming into the era where we are going to be showing you a lot more of the output from the investment that's gone in since the IPO. So, just to remind ourselves what the strategy was, well, we had these 3 core components to our strategy. The first is taking a leadership position in aquaculture technology. We believe that there is a major opportunity. The aquaculture industry is an emerging industry with tremendous potential, but also it's new species, new territories, new geographies, new farming systems, and it requires a lot of new approaches and things to be worked out, developed, and the application of technology to help us with that. And we felt there was an open door there for us to go through and take a leadership position in the delivery of that technology. The second strategy was to take first mover advantage in these high growth markets. So aquaculture is an incredibly high growth market. It's the fastest growing segment of the food industry. It's set to continue at those growth rates into the foreseeable future. It's driven by fundamentals like the emerging wealth in the southern hemisphere and the demand for healthy eating, which our industry serves those fundamentals very well. And we can't see that growth slowing down in the foreseeable future. So taking a first mover position, leadership position in those markets offered great potential for growth and for the delivery of profits from our business. And so that was our second strategy, was to get in there early and take that first mover strong position. And the third strategy, third component of our strategy, was that we would do this by tackling deep-rooted issues. Our customers faced serious challenges as they tackled the development and the growth of their industries into being significant parts of the food industry. We've seen that happen with salmon. Salmon is a very mature business. It's a very solid, highly profitable industry with tremendous demand being developed in the consumer populations around the world for salmon, and there was enormous potential to replicate that success story across numerous other species, but most particularly in the first instance shrimp and tilapia. So, and to do that, we needed to solve some of their deep-rooted issues, things like fundamental disease problems, the learning how to close the life cycle to breed these animals in captivity. So how are we going to do this? How do we execute on this? Well, we put together an aquaculture, what I call a technology powerhouse. What we mean by this is that we put together the relevant biological technologies in one set of hands and giving ourselves the ability to create synergies across R&D programs and developmental programs, and we are positioning ourselves at the leading edge of those technologies. So we're not content to sit back on the traditional vaccine technologies or traditional animal breeding technologies. We're looking to exploit the potential that's offered by the revolution that's going on in biotechnology and in human pharma technology to really drive, to add tremendous power to the potential that's offered by bringing these technologies into the aquaculture arena. In doing that, we are going to develop innovative products. We have been developing innovative products. We began a long time before the IPO in 2013. And we have fueled that program with the investment capital that we raised in the IPO and subsequent raises. And these products are designed to be rich in intellectual property. So having invested in the development of products, we want to be able to defend those products in the markets for a long period of time. And that delivers, in turn, high margins, and it gives us predictability and visibility of earnings going forward. And of course, in doing these things, we have built a platform of technology and of manufacturing capability, which is highly scalable. And one of the things we're talking about to our investors and to the markets right now is just how scalable this business is and how we're going to drive that going forward from here. And finally, We have, at the same time as we've been doing this, we've built a tremendous position in the global aquaculture market. We more or less serve every major segment and every major player in the global aquaculture market, and we have a unique route to market. Today we're the largest technology player in the global aquaculture markets, and we have tremendous potential to exploit that position to drive growth and to drive margins and profits going forward. So if you look at that position in a little bit more detail, and look at the growth that's out there in the market. Salmon at the moment growing at 6% plus per year, tilapia at 11% and could grow much faster, and shrimp expected to double, treble, multiply rapidly over the coming 10 years, 20 years period. So we have markets that are really, the kind of growth, the growth there that is tremendously exciting to be working in that arena. And then if you look at Benchmark's position within those markets, what have we got today? Well, we're the number one player in advanced nutrition. We have up to a 40% market share in the key fast-growing markets of Asia, excluding China, and in Latin America. And we have developed a leading position with the technology in advanced nutrition in those markets. In health, we're the third or fourth largest player. We're definitely the leading technology innovator. We're using lots of interesting and exciting new vaccine technologies, for example, to drive the product innovation programs. And we expect to see the output from those programs driving our position forward and tremendous growth occurring in the health sector of our business going forward from here. In genetics today, Benchmark is the number one aquaculture breeding company. We're the number one or number two in salmon, depending on how you analyze it. We're one of the big five in tilapia, and we recently entered the shrimp markets with a technically very sophisticated program, which has what is known as SPR technology, or specified pathogen resistant technology, which is a technology that the global shrimp industry badly needs today. And then we have our little knowledge services division, which supports the other three divisions by running research farming programs and connecting us with the industry through online platform and training platforms, and draws information in about what's going on in academic arena and in the markets. And this group of companies gives us a distribution network which serves the market in more than 70 countries around the world, and where we operate in our own right in 26 of those. So we have a tremendous platform, which we believe is highly scalable from here on. So let's look at operational progress in H1. So we've been making progress on our key investment strategies. I guess many of you will have seen that we signed up another very large contract joint venture, this time with SalMar, the world's second largest salmon producer. That was in their breeding business, and it demonstrated our ability to leverage the technology that we're developing to grow market share in one of the key markets in Norway on this occasion. That is a very long-term contract with great potential to develop for our future. We've also continued strong progress with our product pipeline. We feel that we're very much on track against the objectives that we set out at the IPO, and we're going to talk some more about the pipeline as we go through this presentation. But we have the R&D programs that we've been running, starting to produce some of the big commercial products. We're getting those near to market, and we're going to talk a bit more about some of those as we go through this. And we've got a very clear focus now on two or three clear headline products that are coming to market in the short term. And we've been making good progress with the field trial, towards the field trial stage, the final stage of two or three of these big products, including one that we talked about a little bit at the IPO, which is the next generation sea lice treatment, with a product that was designed to follow on from Salmosan in the markets. At the same time, in H1, we've had good performance, improving performance in our breeding and genetics division, and that's been partly to do with the recovery in our market in Chile. You'll remember that we had a blip in the Chilean market caused by the isolation of a wild virus in Iceland, where we produced some of our salmon, not on our farms, but in a research laboratory. But that caused the Chileans to be very cautious and close their markets for a period of time, and that locked us out of sales for that time. But we're now recovering some of those sales, and that's helped, and there's been growth across the breeding and genetics division, which is also driving performance there. In spite of continued lackluster markets in the shrimp sector, we've been managing to work hard and maintain our position in those markets, and we're starting to see the first signs maybe of a recovery over the last 2 or 3 months. We're starting to see the green shoots of recovery coming through, and it's too early to say whether that will be sustained for the longer term, but we're encouraged by that. And then the last area that we want to talk about is, of course, a big capital project, the investment in the new Braintree vaccine manufacturing, the antigen suite at Braintree. That's completed now, and we're into the commissioning and validation phase, and the first commercial batches are expected to be produced towards the end of H2 this year. So it was a big step forward for us, because you remember that we needed to create this new sophisticated antigen facility to be able to manufacture these new tech vaccines that are coming through from our pipeline. So this is now completed, and it's going to start delivering against that program later this year.
So we'll take you through the financials step by step in the presentation today. If I just start by giving you a few highlights, I can say that the first half year to 31st of March was characterised as a period of progress and delivery. Here we have seen no acquisitions during the period. Just to remind you that in the comparative period in last year, halfway through, we completed the reverse takeover of Inve, and I'll come back to some pro forma information to allow you to understand the performance there later. So during this first half, we've been very much focused on delivering the synergies that come from those acquisitions that we've made. We've been undertaking prudent management of the cost base, and we've also been focusing very much on our R&D investment. Here we've controlled the growth in that investment, and in particular prioritised those products that are closer to market in order to ensure that we drive forward the organic growth that we've been predicting from an increased number of product launches.
Okay, next slide is designed to give you a little bit more visibility on what's been going on in the pipeline. This is an area of particular interest because we've, as you know, invested a considerable amount of money in R&D, and also, of course, in the manufacturing capability to produce these new products that are coming through from our pipeline. So what we can see here is the pipeline when we IPO'd in 2013, where we had 30 products in the pipeline, and a value we put against those products, which relates to their estimated peak sales. So that would be sales and say year 4 or 5 when the product is matured in the market. And it is not the whole achievable market for that product. It's what we estimate we can achieve with this particular product in the market. So we aggregate the products in the pipeline, and we came up with the value of 350 million. And then if you look at what's happened since the December 2013 when we IPO'd, today we have 81 products in the pipeline, and using the same valuation method that's more than doubled in value, we estimate that to be something like 718 million. And of course that pipeline has had products being launched that have come out of it, and it's also had products that have failed. You know, not all the products in our development program make it through to the finishing line, of course. And equally, there have been new products come in. There's been our discovery programs, and our development programs are identifying new potential, new ways of tackling problems, and new products have come into the pipeline. And so the pipeline has grown in spite of the fact that products are being launched from it. And you can see below here the product launches that have been taking place during that period, over 14, 15 and 16. And we put next to each product its predicted peak sales or its value. And what I want to do is, first of all, just point out that what this shows, what you can see here shows our ability to deliver these kind of products that we have in mind. So Marimark N, for example, is a very sophisticated vaccine. It's aimed at nodovirus and initially for warm water marine finfish, in this case sea bass in the Mediterranean was where we first took this into commercial scale field trials. And we developed that in-house, we manufactured it in-house, and we took it to market from Benchmark, and it's going extremely well. At the same time, we have other product types here. We have the sea lice resistant strains of fish. That is a product range, and PD resistant fish in our salmon business. That's a product range which is also going extremely well, launched in 2015, sold out continuously since launch, and delivering, starting to show absolutely the delivery of the projected profits and revenues that we saw when we first started work on those products. And another one I would point out is Phylovive, a very innovative new product. The first time anybody had managed to freeze dry diatom algae for use as the very first feed in larval stage feeding programs in shrimp and warm water finfish. This product, totally new, innovative process, is now starting to really pick up speed and make significant sales in its markets, and is well on track to achieve or exceed the predicted sales that we had. So our track record of delivering products from our pipeline and delivering the kind of sales and market performance that we're expecting is there. And here in the right hand side of this graph, we're showing you what we have coming through in the near to market in the pipeline right now. So in 2017 we have the new sea lice treatment that we're working on. We also have another genetics product, and we have a little basket of products coming through from our advanced nutrition business. And then in 2018 we have another couple of new vaccines and some more products coming out of the animal health business, more genetics products, and again more products coming out of our advanced nutrition business. So we are starting to show that uptick in launches that we talked about, and uptick in the value of these new products coming to market. At the same time, we've been delivering our manufacturing capacity. I mentioned that we completed the build of the Braintree facility. That's now been, we're working on the validation phase of that, and we expect that to come into commercial production later this year. And we've started on the expansion of our salmon breeding capacity. We can see that our growth in market share and the growth in the market means that we need to increase our capacity. We can project that forward. And also we want to increase our ability to supply out of season products. So that's products, salmon eggs outside the natural spawning season. And that we want to be able to deliver products easily into the northern Norway market. So this project is all about providing that, and we're underway with that and well on track with the build. So Benchmark's strategy has delivered a kind of diversification around these core fundamental biologies that drive success for our customer. And we are seeing that diversification strategy is helping Benchmark to become a more secure business in its trading. So, in this half, for example, we had a tough time fighting to hold our markets in advanced nutrition, and we also saw a slowdown in sales, which was predicted in Salmosan, but that's been offset by an improvement in the genetics business and an increase in market share and growth in that business. So overall, the business has become more secure and more stable, and our trading business continues to grow from this diversified base that we created.
Okay, so let's look in a little bit more detail at the financials, the interim financial statements for the first 6 months, starting with revenue. Here we can see that we had revenue growth of 44%. If we look at the bridge chart, group revenue by division on the right hand side of the page, then we can look at how that growth in revenue is comprised across the divisions. We can see that the largest bar on that chart is Advanced Animal Nutrition, so this is the Inlay acquisition that we made midway through the prior year period, and I'll come back and talk about that in a moment. In terms of the like-for-like growth, so if we exclude that acquired business, then we can see that the sales were up 14%. This is comprised really of the performance of two divisions during the period, and here we can see in the bridge chart that the animal health division had a reduction in revenue of around 5 million. This comes as a result of the softness in the market for Salmosan that Malcolm just referenced. That is something that we anticipated. Of course, in the second half, we have the usual peak season for sales of sea lice treatments coming, and also we have the launch in H2 of a new sea lice treatment, so we expect to see that support sales of the division for the outturn for the year. And then the first half in terms of like-for-like is very much driven by the breeding and genetics division, revenue growth there of 76%. This is driven by four key factors. Firstly, that in the prior year period we had the closure of the Chilean border to the import of salmon eggs from Iceland, which you'll recall meant that we had very low level of sales in that period. We're pleased to say that we've seen a good progress towards recovery of those sales in Chile, and that's partly driven what we're seeing in terms of the growth in revenue, but also that we've seen an increase in our volume of egg sales, and importantly our average price per egg sold, and that is a key performance indicator for the salmon genetics business. As we launch more new products with higher genetic merit, our customers can see that that gives them better performance on the bottom line, and therefore they're willing to pay more to us for each egg sold. At the same time, we've signed the collaborations, the partnerships with two of the three major salmon producers that Malcolm mentioned, and that is starting to deliver revenue as well. And also our sales of lumpfish, cleaner fish that are part of the solution to solve sea lice and salmon, have increased quite significantly during the period. So breeding and genetics, a good result. Then if we look at advanced animal nutrition, and if we do that on a pro forma basis, so if we look at a full 6-month period for both the prior year and for this year, we can see there that we had a revenue increase of 6%. This is against the backdrop of some challenges from disease continued in the Asian markets that we've mentioned. We have seen there that has led to some reduction in demand, particularly in countries that are most acutely challenged with disease. But we are now seeing the signs of a return to growth in the industry, particularly with the shrimp price increasing, and that gives more confidence to producers to put stock in the water. At the same time, we've had some impact of FX in the division. Here the functional currency of that division is the US dollar. So in terms of translation from the dollar to the pound, the relative weakness of the pound period on period has led to some increased GBP revenue. However, that has been pretty much offset by the fact that we price in US dollar in nearly all of the markets for that division, and that has led to some reduced demand because our products for customers that are marginal become relatively more expensive. So overall, we see that there's been a relatively a low net impact of FX for the division. In terms of gross profit and OPEX, we can see that we maintained our gross profit percentage for the group at around 43%. This is partly a function of mix of sales, but the important thing to understand is that we have, across the business, been able to maintain our sell prices and therefore our gross profit percentage on a product category basis. So even where we've had challenges in markets, we've been able to maintain our pricing and therefore our product category margins. In terms of OPEX progression there, as I mentioned, we've had a period of prudent management of the cost base. This is evidenced in the headcount progression. Here in the 6 months we saw a 3.5% increase. That's quite considerably lower than in prior periods. And in fact a significant proportion of that increase relates to new production facilities launched, like the new vaccine facility in Braintree that Malcolm mentioned. We have seen some strengthening of the management team, particularly in breeding and genetics, in order to ensure that we can deliver the synergies there across the different species. So overall OPEX has been maintained at 38% of sales. If we dig into that a little deeper and we treat R&D separately, then we can see that OPEX excluding R&D did increase to 29% of sales in the period. This is largely a result of the headcount increase that I mentioned, but also that we have been overall investing in our management structure to ensure that we can maximise the operating efficiency that we see between the businesses that we have, and in particular the delivery of the synergies on the top line, which is now a key focus for us. Then if we look at R&D separately, you'll have noticed that we've moved now to talking about adjusted EBITDA after deducting R&D, a more standard adjusted profit measure. However, we have on the face of the profit and loss account in the interims line, give you a line for R&D so that you can still track how that's trending. We've seen there that expensed R&D has increased by 7%. However, if we look at it on a like-for-like basis, excluding the acquisition of Inve, it's down 5%. That's a feature of two things really. One is that we've been controlling the investment in R&D, but the second is that as we get to the point of an increasing number of products going to launch or getting close to launch, we are compelled to capitalise the research and development costs during that relatively short window from going into field trials and achieving a full licence. And as we have more products going into that phase, then of course we will be compelled to capitalise more R&D. So in order to make it easier to follow, we are still talking about total investment in R&D as well. This is, if you like, more of a cash measure, and here we've shown you that that's up 17%, but on a like-for-like basis it's actually only marginally up by 4%. That is as a result of controlling the rate and growth of that spend, and as I said, prioritising on those nearer to market products. Overall, expensed R&D is down as a percentage of revenue to 9%. That's short term. My guidance hasn't changed there. We do anticipate for this full year and next year to remain above the 10% level, but then in the long term, as I've said before, reducing down below 10%. In terms of adjusted EBITDA, as I defined it, we've seen that increase by 10%. On a like-for-like basis, excluding the acquired business, the EBITDA loss did widen to 4.9 million from 3.8 in the prior year. This is principally as a result of the things that I've discussed, but in particular the fact that the animal health division did see a reduced revenue of the Samasan product. I've covered how we see that improving in the second half. And our EBITDA margin, adjusted EBITDA margin, did drop back a shade to 5%. My guidance remains the same there, that we'll see that start to increase as we get increased operating leverage as more new products are launched at an increasing rate, and still in the long term we are guiding towards a 20 to 25% adjusted EBITDA margin. We saw our operating loss reduce principally, there's a bar chart on the bottom right that gives you the steps in that, but principally versus the prior year, that's as a result of there being no acquisitions, so actually a net credit on that line related to an earn-out that we're now not predicting to have to pay. And also we've seen the depreciation amortisation just to counter that increase as a result of a full period of the amortisation of acquired intangibles from the Inve acquisition. And finally on the numbers, just to have a look at our cash flow and our net debt position at the end of the period. We've seen their free cash flow still an outflow of 11.2 million, but very much improved on the 30.7 million in the prior year. That is principally as a result of the continued investment in CapEx and production facilities. The completion of the Braintree facility incurred in the period about £600,000, and the new salmon egg production facility in Norway that Malcolm talked about incurred 7.4 million. That's the first part of the construction phase of that build, which is a 2-year programme and will continue. It's on track, it will continue until around about 15 months from now. A total CapEx investment of circa 33-34 million, depending on the FX, the exchange rate between GBP and Norwegian kroner. So we have seen ourselves, if we look at the bridge chart on the right, move into a net debt position as anticipated, largely as a result of that investment CapEx that I mentioned. We still have good liquidity. At the end of the period we had cash balances of around £26 million, and we had the undrawn portion of our revolving credit facility of around 20 million US. And we're tracking as planned towards an increased net debt position at the end of the year as that build in Norway continues. we're expecting something like a net debt position of around 32 million. Just to remind you, around 7 million of that relates to ring-fenced debt that is specific to that construction in northern Norway. So that is something that is very much ring-fenced in a risk sense for the group. We have a key covenant within our facilities of leverage, that's adjusted net debt to adjusted EBITDA. That was 1.1 times at the end of the period. It will increase as planned more towards the 2 times level at the end of the year. The covenant is set at 3.5 times at that point, so we're clear that we have headroom in our facilities.
Okay, the next slide is another slide where we just give a little case study on Salmar, one of our customers, and the one where we signed the new joint venture. This is to give you an example of how we see the development of the business, one of the key themes in the development of the business. And this is our ability to build sophisticated relationships, partnership relationships with the major players in the aquaculture arena. Salmar is the second largest player. It's one of the fastest growing companies in the salmon sector. And you can see on this chart that Benchmark does business across its divisions at each stage of Salmar's production cycle. So here's broodstock, hatchery, nursery, grow out. And we are doing business from our different divisions right across these stages of their cycle. And even though we are not today serving them from the advanced nutrition division, we are actually working on products that we think will come in and that Salmar are very interested in seeing coming forward. Special diets for their cleaner fish production and potentially new products for salmon in the probiotic and immunostimulant arena. So we are able to develop sophisticated technology services and partnership relationships with our big customers, and we see this as a big feature in terms of the development of Benchmark. This is something that these customers want from Benchmark. They have big problems that they need to tackle, things like sea lice or problems with other diseases or problems with the way in which they rear and reproduce the animals that they're farming. And the ability of players like ourselves to bring technology, advanced technology to bear on those problems and sophisticated holistic solutions that can really drive their performance and their cost of production down is a major advantage that we have, and one that our customers really support and want to see. So in terms of delivering our strategy, we'll return to the core strategy again, just to look at that. So first component of strategy, taking a leadership position in aquaculture technology. Where are we against that? Well, we have built very strong R&D programs and a strong product pipeline. We have also built, and we are building, state-of-the-art manufacturing that allows us to produce and deliver these products to our customers around the world. And we're also building creating more of these partnership relationships with some of the world's leading producers in the aquaculture arena. The second area is having first mover advantage. Well, we are demonstrating that as well. We are the first aquaculture company in the breeding sector to use the advanced technology of genomic tools. We're one of the first to use QTL selection in the field, and we continue to push those technologies forward. We're the first company to create around-the-clock global diagnostic capability for early detection and management of diseases for our customers in the different sectors. And we are continuing to drive through new technologies in the vaccine and in the advanced nutrition arena, which put us out in front of our competition in terms of that first mover advantage. And are we tackling the deep-rooted issues? Well, yes, we are. We have a highly skilled team with decades of experience. We've often been working with our customers as they built their businesses from scratch in these new species that they're farming. And the tools like the robust genetics that we're bringing to market are tackling the problems that cause restrictions in their production. And so we are beginning to really demonstrate that the Benchmark strategy is working in the field with our customers. Okay, let's talk about our priorities for the second half of the year. So we have this very important product coming to market, the next generation sea lice product, and it has a treatment system with it. It was designed this way, and we've been working on the development of this right from the beginning of the development of this product back in 2010. And the concept here, the vision here was that one of the big problems that the aquaculture and indeed the farming industry faces is the release of drugs into the environment and the impact on the environment that the industry has as a result of this. So we wanted to bring forward the next generation that had no impact on the environment. And there are two ways of approaching that. One is through using biological control mechanisms, and we have components in our program that do that. And in this case, we had a treatment system that reprocessed the treatment water that the fish were being treated in to remove the sea lice before anything was released into the environment, and removed and reprocessed and removed the drug from the water. So this new product that's being launched now is a bit of a breakthrough for the industry because it has zero environmental impact. The second big area of focus for us is the completion of the vaccine plant, the manufacturing facility at Braintree. It's really important because some of our new products are starting to come to the point where we need to manufacture the products for the final trials, the final developmental trials, and this has to be done in the plant where you are going to make the commercial vaccine. And so it's a really important step. We've got the plant ready and built in time in order to allow us to do that as these products come to that point in the pipeline, and there's a big focus on delivering that in the second half of the year. Another key theme for us is expanding our influence in the Asian markets, both in China and in the wider Asian markets. This is where the greatest growth in aquaculture is taking place, and where many of the synergies that have been created by the bringing together of the Inve business with the Benchmark business, where many of the synergies exist, and we have a big focus of getting out into these markets, bringing forward to them the new products from our genetics and from our animal health division, to bring those in alongside the products that come from our advanced nutrition division. Another key theme for us is to continue to lead in the development of technology and to expand the technology solutions that we're able to offer, in this case into new species. There is huge potential to transform the cost of production of some of these new species like grouper and Seriola and barramundi and the like. And one or more of these species will become major contributors to the aquaculture scene in the way that salmon has become over the coming era. And Benchmark is playing a very active role in bringing these new technologies to those species to help unlock that production capability. And lastly, we have this theme that we've started to talk about, of developing strategic partnership with industry leaders. That's going on across the world. We believe that we have a unique capability to deliver huge benefits to our customers by bringing together these biological themes that make up the Benchmark business and make up the Benchmark technology platform. And this is something that our customers very much welcome, and it's a big focus of attention for us in the second half of this year. Looking longer term, into the longer term future, well, we have, as we always said right from IPO, that the investment program that we were putting into product development would bring us to a point where the number of new products, exciting, powerful new vaccines, would start to increase through this period from 17 and particularly in 18 and 19. And we're starting to show very clearly that uptick in launches and the revenues and profits that go with that is starting to happen, and it's coming forward. So it's a big area, important area for us going forward from here. We're also looking to expand our footprint, first of all in China, and there's a lot of work going on in delivering an improved position in China. We already do business in a number of the key markets in China, but we want to expand that, and we want to develop that so that we become one of the major players in the Chinese scene. And also there is a big emerging market, particularly in tilapia and warm water pond cultured species in Africa, and we can see there's great potential there. Egypt, for example, is now the second largest tilapia producer in the world, and this is becoming a big focus of attention for us in the longer term to develop Benchmark's position in those markets. We will continue to be an aggregator of technologies and scientific approaches to solving the problems our customers face. And we're looking to continue to sift through what's going on in the fast-moving and exciting biotech arena to pick out the very best technologies to drive these solutions for our customers. And we aim to grow alongside at a rate faster than our core markets, but we aim to grow alongside our core markets for the very long term. Such that the Benchmark's growth will be driven by more than one of the, by the aggregation of these factors here, and that is the reason why we are predicting this strong growth and why we're so confident about it. So, in summary, Benchmark has built a highly scalable platform which brings together the key biological disciplines that we need to drive success for our customers. And we will continue to build on that platform to drive this business forward. We expect to create a business that is much, much bigger than the Benchmark that you see today.
Great, thank you, gentlemen. Very comprehensive review. We've got quite a number of questions. I would encourage anybody who has residual ones to submit them now. But let's kick off a couple on the pipeline, which is clearly very important. Could you say a little bit more about why you've changed the measurement to looking at peak annual sales rather than addressable market?
We wanted to have an assessment of value that everybody could understand and that was uniform, that we could apply across all of our products. An addressable market was kind of confusing because what we were doing was, for example, in some cases we had 3 products, 3 different discovery programs or 3 development programs which were looking to bring forward a product for a key, with a key market area, with a key opportunity, but we might have 3 programs running on it. And what we were doing was declaring a third of the overall addressable market for each one. And if one of them came through, then it could take the whole market. But in a way, we were worried we didn't want to exaggerate our position. We felt there was so much value in the pipeline anyway that there was we didn't need to kind of overstate or express the value in terms of addressable market, which made it look even bigger, or could make it look even bigger. So we felt that assessing the market opportunity for each product in terms of its predicted peak sales was a more precise way and a more reliable way of looking at the value in our pipeline.
Yes, so that's fair to say you've taken a more conservative assessment and still ended up with a materially expanded opportunity. And then one specific area, in the past you've been very excited about the potential of HypoCat and the potential also for VLP delivery, which hasn't really got a mention today. Could you update us? Have there been any delays in the program?
No, we're still making good progress, and in fact the vaccine that we are showing as coming to market next year, one of the vaccines that we expect to come to market next year is a VLP vaccine. It's using this new technology. It's an extremely interesting and powerful vaccine. It has great potential for the warm water finfish markets. It's coming to market. It'll be launched into field trials in the sea bass markets first, where we've already established a position with Marimark N on nodovirus vaccine, and this is a nodovibrio vaccine, the next one. So we expect to see that is one of the early expressions of that new technology. And the development program for these kind of new technology vaccines, VLPs, recombinant vaccines and the like, is still making good progress, and indeed the HypoCat vaccine is one of those which we're making progress with still.
Thank you. A couple of questions on your shares, very appropriately. There seems to have been a little passing of parcels with Lansdowne reducing and Ferd becoming your second largest shareholder. Do you have any insight as to what drove both those parties? And then looking forward, given that Ferd are a significant player now, are they very supportive of your ambitions of scaling up the business? Because clearly the support of large shareholders is going to be important in financing that.
Yeah, so I'm not really sure what drove the Lansdowne decision making. I mean, I can say that the markets have been quite difficult, and sometimes been the volatility in the markets that's driven decision making in terms of people deciding to reduce their holdings. But I'm not sure exactly what the reason was behind the Lansdowne decision making. In Third's case, these are a sector-savvy investor. They are a Norwegian business who know a lot and do a lot of work on the aquaculture market, and they identified that the same kind of opportunity for Benchmark that we can see, and that it was that thinking about the long-term growth and development that brought them into becoming a major shareholder in Benchmark. And yes, they do. They are very supportive. They're a very intelligent and supportive shareholder who understands the opportunities very well and are very enthusiastic about the further growth and development of the company.
Good to hear. Let's talk a little bit about sea lice. The decline in salmon has been well flagged since you came to the market, but the threat of the disease seems to be as strong as ever. For the uninitiated, could you just give a little bit more detail about the new product, how long field trials take, when you will actually start to see sales benefits coming through into your revenue, and in the whole process of likely demand for it, what visibility you have today from potential customers?
Yeah, okay. Sea lice remains the major challenge for the salmon industry. It's a significant problem because sea lice live on the outside of the fish and they damage their skin and outside structures, and in effect knock holes in the fish which other diseases can get in through, as well as reducing the value of the fish, and there are welfare issues. So they're a significant problem to salmon producers. And it's in excess, people believe that these days it costs the salmon industry in excess of $1 billion to manage sea lice right now today, and that's a difficult management process. We wouldn't, I don't think anybody would say that they're anywhere near 100%, they have 100% control of sea lice with the tools available today. So when a company like ourselves brings a new product to market, a new molecule with highly efficacious, and also we're able to combine that with a delivery system that means that molecule has no impact on the environment, you can see that this is a potential exciting moment for the industry. It has great potential, and in a way, to try and answer the question, that does give us some visibility, because we can see as we start to develop the field trials, these are extended field trials, we can see how our major customers are reacting. They're obviously as every bit as excited as we are about the potential that this has for sea lice management going forward. We see the longer term future being all about biological control, and what that means is developing fish that are resistant to sea lice in the first place, developing vaccines, hopefully, that will enable us to prevent sea lice, any that get past the natural resistance that we're breeding for now. We can prevent them from succeeding and staying attached and breeding with vaccines. It's about using cleaner fish. So biological control systems, one of the key ones now is cleaner fish. This is lumpfish and wrasse that actually eat the lice off the salmon. That's a very good control mechanism. And the beauty of these biological control mechanisms is that they don't involve expensive treatment or stressful treatments of the fish, and some of the mechanical treatments that are out there now are quite difficult to manage and they're expensive. And so, biological control is going to be the preferred option. Our new sea lice treatment will even when biological control comes through, and our view is that will be in the medium term, that we will see increasing strength in these biological control mechanisms. Some of them are becoming very efficacious today, we expect that there will still be a need for a last control mechanism, a kind of fail-safe here, which is a treatment, because some fish will always contract other diseases, and that weakens their immune systems and makes them more susceptible to sea lice. So in those situations, we will still need to have in our back pocket an effective and environmentally benign treatment system, and that's what this new product and the delivery system that we've been working on for 7 years now was all about. And that's why it took quite a long time and quite a big investment from Benchmark in order to get to this point.
And just to answer the point about revenue from the new product, then these are commercial field trials, so that we will achieve revenue from the first trial onwards.
So analysts are building in something for the second half.
They are,
Yeah.
yes.
And typically field trials might be lasting how long?
That depends on the regulator, but these are commercial field trials, so this is commercial use of the product under controlled field trial situation. So we're collecting data from this use that is the final stage in getting what's called a marketing authorization, the final license. So we are generating revenue whilst we're going through these field trials, and they can typically be 1 or 2 years, sometimes more.
Okay, right. Couple more quick questions. M&A, successful M&A is very important to Benchmark's history and future. Invase seems to be going well. It's a relatively recent deal. Is there any way, question for you both, I suppose, that you can look back at the combination of Stoffen-Fisker and Salma breed and say whether it's exceeded your expectations, matched your expectations, or is that difficult to do within a division now?
Well, we had quite ambitious expectations. Let's start by saying that, and I would say that we have met those expectations. We initially did exceed them. We had a very good start, and then we had a little bit of a setback with the closure of the Chilean border, which we're now recovering from. But I think taken overall over the period that we've since we put the two businesses together, I think we've met our expectations, and we had pretty ambitious expectations.
Well, that's good to hear. And then just the very last question, I suppose a philosophical one, coming back to your shares. Do you remain happy being on AIM, or do you foresee a time in the future, if you continue to grow as you hope, where a full listing might make more sense for Benchmark?
We think that AIM has worked for us, so we are happy about AIM, I think the IPO and the ability to apply capital from public markets to the development of Benchmark, and indeed to the development of the global aquaculture industry, has been a success. So we don't have any disappointment around that. I think ultimately we may well grow in the short medium term to a size that means that we would be better placed on the main markets, where we become followed by the indexes and so on. There may be some key advantages in doing that. We're not quite there yet, so there's some more work to do. But yes, I think there is that potential is on the horizon now.